Commodity markets. I'm joined by Jonthan Barratt, Managing Director with Commodity Broking Services. Jonthan Barratt, welcome to the program.
Good morning, Whitney.
So these announcements of job cuts by One Steel, are we seeing the beginning of the end of Australia's steel industry, or will it pick back up again when the Australian dollar drops to lower levels?
I think it's a start of rationalisation process. That's what we're seeing when we're living through a GFC, when we're living through concerns in Europe, when we're living, I guess, through these uncertain times. Companies aren't going to see that demand for commodities. So I think that you will see quite a bit more rationalising process in the sector.
And how bad do you think it will actually get in terms of this rationalisation?
Well, I think it really is interesting. I mean, we're still seeing good demand out of China, although they have cut their intake of steel. There's no doubt about it. But I just think that's all about slowing down. So I think we'll get to a base level for demand for commodities, and then hopefully we will start to see a lift. We still believe in the super cycle, but I think it is having quite a large rest at the moment. It might extend itself for another quarter, even another 12 months.
So we're nearing the end of the super cycle then?
No, we're in the super cycle still.
In the middle, the bottom half.
That's correct, yeah. So hopefully we'll start to pick up again.
Does the government's push for the resources rent tax, does that play a role, though, here?
I think it does. I think it'll play more of a role, given that we are getting the economy starting to slow down. It's okay if you're in a boom scenario. That'll have no problems with that, because it's nice to feed that tax to more people. But I think the problem I do have is when we have so many global concerns, an additional tax on anything creates more of an issue, because it doesn't allow the world of economics to take hand. It's just another thing pulling back production. And that, to me, I think is an issue.
Now, this mining tax, it did garner a lot of negative sentiment when it was first sort of flagged. Then it went back on the back burner.
Yeah.
Are you surprised that it's sort of been revived?
No, I think it's all about a push to get these things. There were goals which were set out by the government, exactly what they wanted to do. So now they're just time to revise them. So they're just coming back to what they started out and said, OK, this is what we want, this is what we think is fair. So it's just redressing old news.
And what kind of reputational impact will this have on Australia in the context of its position within the region?
I don't think too much. I think, once again, it holds back production. So I don't think it's going to have too much an effect if in fact, we see it as a dampener on the economy.
Because there has been a human cry from the industry, saying that it will damage the reputation, that our customers in the region won't be, so keen to do business. You don't think that really holds water?
No, I don't think. At the end of the day, they want commodities. We happen to hold them. So there'll always be prices paid for it. And remember, if you add in that extra cost to it, it's just another cost of perhaps the market moving higher in terms of the demand and the price people have to pay. If that's what they have to pay for it, then they have to pay it.
So one would assume then that the cost will be passed on to customers. So will nations like, China and India be displeased with that, or they're it's just a natural part of the ebb and flow of market prices?
I think it's just part of the natural flow. It's just another cost of doing business, and I think that's all it is. So I think that they do want commodities. It's certainly there. They need it, so they'll pay for it.
So it really doesn't have the sort of potential, in your view, to damage the golden, the goose that's laid the golden egg, so to speak, for the Australian economy. It's one of those things that it'll be introduced. Once it's introduced, people, it might be a bit sort of discomforting for a couple of, a short period, and then people will get used to it and it'll be absorbed into the system.
Absolutely, we'll get used to it. Although I don't accept it, and I prefer to reject it, but I think if they're going that way, then it'll be accepted.
And why don't you accept it?
It's just another tax.
Okay. All right. Well, I'll leave that with you there. We won't have to go any further on that. Let's just look at the sector broadly speaking. Now, we've seen sentiment weaken across the sector. What's driving that? Look,
it is. It's all coming to a head, and it's just one of those things that, we had the GFC. The GFC created an issue with the government sovereign debt. Current sovereign debt becomes an issue. Then all of a sudden we've got the super committee in the US. They can't come to an agreement on how to retire the debt. So it all is a deficit issue, how we pay back the deficit, and at the end of the day, how do we get economies going? So it is a very tricky situation that the global economy is in at the moment, purely because we all lean towards the US to hold up its recovery, because all the economic numbers were pretty good. And we felt that Europe could perhaps rest on the US shoulders and also China's shoulders. But I think now that you have another further debate in the US coming up to another presidential election, you've got an issue. They can't retire. They haven't got the plan for that $1.2 trillion area to retire that deficit. Government GDP to debt in the US is currently at 97%. So, when you look in retrospect around the rest of the globe, this is a debt problem that needs to be addressed. And I think that's one of the big keys that I think everyone's trying to, but we're not really getting to it. And I think that's an issue, and that's been reflected in poor equity prices and poor commodity prices.
And so would you suggest then that commodity sector on the whole will be sort of lacklustre for some time to come?
I think this is the interesting thing, because thrown into this mix, we've got some commodities, which are certainly trading too high, on other things like with oil in Iran. That's going to act as a further brake on economies when you have a 10 to 15% increase in the price of that primary input. Other commodities such as copper are coming back, which is good, because that certainly helps. But whilst we don't see that demand come through the economies, or the optimism of demand, people will drive these prices lower. It does have a silver lining though. Okay, prices are much lower and they'll be able to clear through economies a lot better.
You mentioned Iran. I'd like to just quickly look at that. There's continuing tensions there regarding its nuclear program. There's also these protests in Egypt. To what extent does these tensions, have the potential to flare, get out of control, and then heavily impact the crude sector?
I think Iran there's more of an issue there. I think with Egypt it doesn't. Okay, when we had the flare-up before in the beginning of the Arab Spring, nothing really happened in Egypt. It was only when Libya came into the fray that we saw prices start to increase. So I think anything in Egypt won't have too much of a concern to the price. Iran, I think, is the big issue. We know what they're doing in terms of their nuclear defences. We know what they're trying to achieve there, and I guess the concern is that will leak and create more nervousness in the whole geopolitical Middle Eastern area, and that'll cause Israel to have concerns, Israel back to America, and then you'll see a whole series of trade sanctions going on. That'll be the first step, and we'll have to see how Iran responds to that first step.
Jonthan Barratt, thanks for joining us.
Thanks, Whitney.